Hey everyone, one of the coaches at the Ungar Academy here, and today, in the wake of our video about the movie Trading Places, which was a really good success, we're going to comment together on some of the scenes that most concern us as traders in the movie The Big Short. Now, this movie is about the housing crisis of 2008, which was mainly caused by the greed of the big American investment banks, including the Lehman Brothers and Bear Stearns, to name just two, which were then not bailed out by the US government, like other banks, but went bankrupt and left an entire generation stranded. But before we start, as always, I invite you to please subscribe to our channel, click on the notification bell, and leave us a like to this video as well. Thank you so much.
March, Bear Stearns was in a death spiral, and the Fed brokered its sale.
The worst financial crisis in modern times. Certainly the largest financial disaster in decades in this country, and perhaps the end.
Our financial institutions are strong.
But there were some who saw it coming. While the whole world was having a big old party, a few outsiders and weirdos saw what no one else could. These outsiders saw the giant lie at the heart of the economy, and they saw it by doing something the rest of the suckers never thought to do. They looked.
Now, among these outsiders who were watching was Michael Burry, a fund manager in California, Skim Capital, so not exactly an outsider, who discovered that most of the holders of these mortgages were defaulting and not paying the installments. So the banks themselves had non-performing loans that were difficult to recover.
95, it's 30 days late, it's 60 days late. They paid on time. FICO scores.
Michael, how are you, guy?
Lawrence, I found something really interesting.
Great, Michael. Whenever you find something interesting,
We all tend to make money. What stock are you valuing?
No stocks. I want to short the housing market.
really?
But most of these outsiders were not listened to. Many preferred to continue not to believe the warnings of Michael and others in those years, and we all know how that turned out later in 2008. Even Mark Boehm, whose real name is Steve Eisman, the fund manager at the time, and his team, in talking to some investment bank brokers, realized that the biggest real estate bubble in history was underway.
How many loans do you write each month?
About 60.
Yeah. What was it 4 years ago?
10, maybe 15.
Yeah, I was a bartender. Now I own a boat.
You own a boat. So how many of these are adjustable rate mortgages?
Well, most.
Oh, yeah.
Yeah, I'd say about 90%. The bonuses on those skyrocketed a few years ago.
Do people have any idea what they are buying?
I focus on the immigrants, you know? Once they find out they're getting a home, they sign where you tell them to sign. Don't ask questions. Don't understand the rates.
Here in this scene, it's also clear how the banks, out of greed, because their fees of these mortgages were so high, were selling more and more mortgages, even to those who unfortunately couldn't afford it, but were still willing to go into debt. Now, this securitization, which is the conversion of multiple bonds or mortgages in general into a single product, led to the creation of new financial instruments, such as CDOs, which were nothing more than unsold mortgages that were repackaged, given a AAA, the highest rating, by the rating agencies, and then sold on the secondary market.
A collateralized debt obligation. It's important to understand because it's what allowed a housing crisis to become a nationwide economic disaster. Here's world-famous chef Anthony Bourdain to explain.
Okay, I'm a chef on a Sunday afternoon, setting the menu at a big restaurant. I ordered my fish on Friday, which is the mortgage bond that Michael Burry shorted. But some of the fresh fish doesn't sell. I don't know why. Maybe it just came out halibut has the intelligence of a dolphin. So what am I going to do? Throw all this unsold fish, which is the BBB level of the bond, in the garbage and take the loss? No way. Being the crafty and morally onerous chef that I am, whatever crappy levels of the bond I don't sell, I throw into a seafood stew. See, it's not old fish. It's a whole new thing. And the best part is they're eating 3-day-old halibut. That is a CDO.
When it became known that the big investment banks were involved in this mortgage run, and that they held many of these CDOs, it triggered a general panic reaction in the markets that drove these banks into a severe liquidity crisis, or, in the case of Bear Stearns and the Lehman Brothers, even bankruptcy.
Every time I hit refresh, it's dropping, man. It always goes down.
Only that in the entire history of Wall Street, no investment bank has ever failed unless caught in criminal activities. So, yes, I stand by my Bear Stearns optimism.
Mr. Miller, I'm sorry, quick question. From the time you guys started talking, Bear Stearns stock has fallen more than 38%. Would you still buy more?
Yeah, sure. Of course I'd buy more. Why not?
Boom!
And finally, unfortunately, the outsiders in our film weren't wrong about the impending crisis. The US government intervened, but unfortunately, only after the damage was already enormous. Banks that were considered safe, low-risk investments before 2008 turned out to be fraudulent, and that changed the way that we all think about investment banking today. Well, I hope you enjoyed the video. If anyone among you is interested in the world of systematic trading, I recommend you please go and click on the link provided in the description of this video. From there, you can watch a free presentation by Andrea Unger, or get our best-selling book by just covering the shipping costs, or even book a free call with a member of our team. If you enjoyed this video, please leave us a like, subscribe to our channel, and go and click on the notification bell to stay updated on the release of all our new and upcoming content. We thank you so much for watching, and we'll see you next time. Bye-bye.